Hi, it's that time of the year again when we turn our attention to year-end tax planning. Some ideas of what we should look at and plan for 2014 and to make sure that we get the most out of our tax refunds in 2013. Also like to turn my attention now to business and corporate owner-managers for things that pertain directly to them at the year end. Tax rates on non-eligible dividends are increasing in 2014 after the March 2013 federal budget. Review whether it might be beneficial to declare increased dividend payouts in 2013 to avoid these higher tax rates. Review your corporate investment accounts. Is it possible to trigger any capital gains before the end of the year? This may allow you to have the tax-free half of that capital gain withdrawn at any time at your preference to any class of shareholders, completely free of all tax through the capital dividend account. If you have any established prescribed rate loans in any manner, be certain to pay the required interest before January 30th, 2014 to keep those preferential prescribed rates in effect. If you are an employee but have incorporated yourself in the past as a consultant, be aware that CRA is paying special attention to what they call the Personal Services Investment Corp. What this is the way to root out who is really an employee from an incorporated individual. They will, if they in fact classify you as a personal services corp, they will levy tax in the corp at the highest rate as that paid by any public corporation, which is roughly double what a small business corp pays. Much higher, very unfavorable rate. I'd like to chat just for a second about installments. If you have either personal, trust, or corporate tax installments that are required to be paid, I'd like you to consider reviewing those and make sure that by December the 15th, 2013, you have paid all required installments to avoid a very high interest rate that CRA will charge you if in fact you have not made sufficient installments. And generally, in last year, I'd like to talk about your need now to plan for 2014. It would be crucial for you to either late in 2013 or 2014 make sure you get your accountant and financial planner in the same room with you to discuss 2014 and what is best for you going forward. Examples of things that you will want to discuss in that meeting are: optimize your salary dividend mix from your owner-manager corporate accounts to make sure that you're taking your required cash flow as tax efficiently as possible. I want you to determine the optimal investment income required from any investment accounts that you might own for next year, and allow the accountant to tell you the best one for you. Then your financial planner will be able to reverse engineer that recommendation to get you the right thing and lower your tax bills that you can and possibly control for 2014. And lastly, I'd want you to make sure that you're planning for all our required cash flows from these investments to provide the required flow to either supplement your retirement or your lifestyle purposes as required. This is not an exhaustive list. It is very important that you meet with your accountant and financial planners as soon as you possibly can to get this right for 2013, going off into 2014. Hope that gave you something to think about, and we'll see you the next time on Tax Alpha.